That's your money saying it's time for a McDonald's run. Because with new McValue at McDonald's, you get more than you expect. Like buy a 6-piece McNuggets and add a McChicken for just $1. Your money says let's go. Get more than you expect with new McValue. Prices and participation may vary. Valid for item of equal or lesser value.
Reality radio for a really great future. We're talking real money.
Are we real? Are we really here talking real money? Really? I think this is us. There's Tom. Yep, here's Don. And there is no football right now. It's later. Right?
Yeah, much later.
Which is good for us because we can be on and help you today.
Good for us, bad for the fans. I mean, you got to stay awake till midnight to get the score, but hey, that's somebody else's problem. Or in the
only
East
on
Coast.
The East Coast.
Yeah, you got to get up
only
early.
On the East Coast.
Ridiculous. So
it is. If you like West Coast teams and you live on the East Coast, I'm sorry.
Yeah.
You don't do well. Hi, I'm Don. That's Tom. This is Talking Real Money, the show that helps you manage your dough better than you ever did before, because we're going to do something unique in this industry. Really unique. We're going to tell you the truth.
That would come as a great shock.
It's unique.
Yeah.
It's unique. There's so much lying going on, or obfuscation, one of my favorite words, because it kind of means hiding the truth a little bit. That's what this business is about, and all of those, oh, they're so nice people are probably not as nice as they seem.
Well, they're nice. They're smiling in your face all the time. They want to, you get the song.
But that's not nice. That's being disingenuous.
That's true.
Isn't it?
It is. Yeah. I mean, you're talking about the people that give most of the advice in this industry, that get you excited at the wrong times, that tell you that you can really have something you can't have, which is make money at no risk, right? That's what they want you to believe. Yep. And that you're not going to pay anything for things, which is
I know
drives me crazy because
I just attended a relative's funeral in Virginia, and when you talk with relatives afterwards, and being in this business, you tend to hear the horror stories. Well, there's one member of the family who is now a stockbroker with a big firm, but prior to that was a investment advisor with an insurance company. And I am going to test your psychic ability.
That's the worst signing since the Antonio Brown deal with the Raiders. Come on. I mean, really. All right,
now I'm going to test your psychic skills for a moment, all right? Put on your little psychic hat.
Okay.
You got it?
Yeah.
He was an investment advisor with an insurance company, and he sold all of the family members a blank.
Does it start with an A and end with a Y?
Whoa.
Does it guarantee something? Does it come basically at no cost? Does it?
No cost.
You don't pay the advisor to put you in that. That money comes from the company, of course. And it pretty much ensures your future because you make a lot of money and you take zero risk, correct?
You just, wow.
I do this on Sundays. I didn't want to tell you that.
You never cease to amaze me, Dr. Psychic.
Yeah.
I saw you. I was driving through North Carolina the other day, and I saw your little roadside stand, your little financial psychic stand there.
I was blowing by the wind. You're going the other direction.
Yeah. And it was funny. One of the relatives said, I finally got out of that annuity so-and-so sold me.
Yeah.
But then they got into a bunch of loaded funds. Just
to explain to those of you listening, a loaded fund is a mutual fund sold with a commission. There's no reason to pay a commission to buy a mutual. Hasn't been for about 25 years. You could basically buy the same fund with no commission.
Or a better fund with no commission.
Or a much lower cost fund. Or a more diversified fund. Or a more passive fund that just gets you the market returns instead of trying to find somebody who is a psychic who can see the future and put you in the right things at the right time, which we can't find that person, sorry to say.
Well, only because that person doesn't exist.
Oh,
period.
That's it. Okay.
Yeah. We were, by the way, just want to let you know, the whole thing about Tom being psychic, that was a joke.
Thank you.
Tom isn't psychic. No one is psychic. It is a lie, and I know you know it's a lie, even if you kind of believe in psychics a little. It's not true. You know that nobody can tell the future, and yet Wall Street sits around doing it all the time.
And they've done it so well that most of you listening believe that's what you, Don, and I can do, that we can, and we'll talk about a story of a very nice young couple I met last Sunday at before a soccer game. That'll shock you. And questions they asked me, and what I tried to turn their attention to something completely different, because we don't know the future.
You can ask us questions at 855-935-TALK, 855-935-8255. Give us a call and get tickets to our next class.
Tom and Don are talking real money.
Do you need a little help with your investments? Set up a free, no-obligation appointment with one of our advisors at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
And we got to sneak the really important stuff in between football games. There was no show last week because we were preempted by a football game. So all of your questions must have piled up over the course of the week, which is why we need to give you a phone number so you can call us and ask those questions that have been nagging at you now for 2 weeks. I know you had to suffer a little longer than usual. So call us at 855-935-TALK, 855-935-8255. And not only will you get answers to your questions, truthful answers to your questions, what else do you have for them, Tom?
Well, you're going to get free tickets to the Real Retirement Roadmap. 3 great classes coming up. Tuesday, September 17th, which I think is a week from Tuesday, right?
Yeah.
Yeah, okay. That one's in Linwood.
Yeah.
Then the next night in Tacoma, the 18th, and then Saturday, the 21st, in Bellevue. 2-hour class. We run the gamut on these, and they're interactive. No, we really do.
We may be trying. I'm just saying we may be trying to cram too much in.
All right, we're very ambitious.
I think maybe, because we got Medicare. We're talking about that in addition to all the other stuff.
We do, yeah. It's all about you, your retirement, your plan, and you can. So if you go now online to TalkingRealMoney.com, are we giving out the code?
Well, sure, we can give them the code for 50% off.
Okay, because the tickets are only
which is
$5.
M-A-P.
Yeah, so you just go to TalkingRealMoney.com, pick which class you'd like to attend, right?
Right.
And then type in the code
MAP, M-A-P.
M-A-P. Okay.
As in Real Retirement Roadmap. I just want to make it a short word.
Yeah, the 17th in Linwood, the 18th in Tacoma, the 21st in Bellevue. Do it.
But,
do it.
Shh,
yeah.
Quiet. If you want a free ticket, call us and ask a question.
Okay. Yeah.
Okay.
So, and I was just started. You gave that number.
Speaking of questions,
855-935-TALK is the number. I was having a great time. You mentioned you alluded to this. When you're in public or when you're out with your friends or when you're out with acquaintances or family or whatever, and you mentioned you're a financial advisor. Mm-hmm. It's a fascinating thing because this happened a week ago before the Seattle Sounders game. I was with my son, having a great time, kind of getting lubricated before the match. And a nice young couple sat down next to us, started a conversation. And he says, "What do you do?" Now, you're always at that moment where I want to say, "Well, I'm a referee for the National Football League," or something, where it says, could I pass
because
that?
then
No.
they're going to say, what about the pass interference replay?
Right. But when you say financial advisor, it's fascinating. So the first thing out of this, the young man is barely 30. He was in the Army. Sounds like a great American. He recently moved here because his company moved him up from Southern California. The first question is, what about the trade wars and the inverted yield curve? That's what people expect you and I to respond to. I tried to turn it around and say the market you shouldn't be even thinking about the market. You should think about you. What things can you do? You can save, right? You can buy low-cost products. You can be diversified. It turns out that when he got out of the Army, a friend sent him to somebody else who put him in loaded mutual funds, high expense. He has one with an expense ratio over 2. That's an outrage because you can own the same thing for 0.2%.
Yeah, but let me guess. the person he went to was really nice.
Oh, they're very nice. They happen to live on the East Coast,
really
the same
nice
state
guy.
that he grew up in. But the point is, work on the things you can control. You can do nothing about the yield curve. You can do nothing about the tweets or the trade wars. Zero. But you can pay attention, and this is always. But this industry has been so focused on making you, Don, the expert about what's going to happen Monday morning.
I know, and I've
it's
got to,
wrong.
I've got to apologize.
You're
I'm
no
so
expert.
sorry. I am so sorry. I'm sorry. I get on every morning on
I
Como
know.
and pretend that those numbers matter. I don't mean to, but people want them. So I pander to their wants, and
I know.
I feel bad
So
for giving out the numbers now.
Go ahead and call us and ask us about. Well, what was it at the? Oh, I guess the good news at the end of the week was that Antonio Brown's not playing on Monday. No, kidding. That was not the good news. The good news
That was good for me.
I
I'm
know
a Broncos fan.
Boy,
That was great
happy
for
days
me.
for Broncos fans. The good news was apparently, and this is going to shock you, they may work out a trade deal with China. Okay.
Antonio Brown for iPhones.
I see straight across. I'll take that one all day.
855-935-TALK is our phone number. I don't know how we got off to NFL
Yeah,
football.
well,
That's
I
his
do.
fault,
Yeah.
and he needs to
I
apologize for
need some
that.
counseling for that is what I need.
Faux pas. Marty, you are up. Welcome to Talking Real Money.
Hey, Marty.
Hi. Our question is that with the bonds paying such a low interest rate, would we be better off putting the money in a CD, the 60-40 split with 40% going into CDs?
Wait a minute.
That's a
A
good
what?
question. No, so instead of putting money in bonds, which are paying now,
Got it.
let's say, 2%. I mean, the 10-year is
using
1.5.
CDs.
Laddering CDs, for example, instead of that's an
Got it.
interesting idea. Now, the question then becomes, for me, liquidity. Do you need the money?
Well, you'd have, if you ladder CDs,
That's
you'd
true.
have
more over time, yeah.
20%, a 5-year ladder, you're going to have 20% of the money available every year. So that's decent liquidity. You can even get out with a little bit of a penalty, but it's usually just a bit of an interest penalty. But
Did we lose her?
boop, boop,
Marty?
boop.
Did
Yeah,
we
but she
lose
can
her?
listen on the radio.
Okay.
She can listen on the radio.
Yeah.
But here's the thing. Is the CD yield really going to be that much better? And it may not, because when we say get into bonds, we're not saying go out and buy your own bonds. We're saying buy a bond fund. So when you buy a diversified bond fund, you're probably going to get a yield in the 2-ish range.
And you got to remember why you should own bonds. Just went through this with somebody yesterday because they look at their portfolio and say, this part's making a lot, this part's not making very much. And by the way, some of the bond funds we recommend and use for our clients are up about 9% year to date because those rates have come down.
Were.
Thank you. Bond should be held for portfolio stability, not because you're trying to make try to make the money with stocks. Keep the money with bonds. Can you do that in CDs? Sure.
Yes, you can.
Yeah.
And I'm not against laddering CDs. I'm against buying one maturity of CDs because then you're betting on interest rates. But it's interesting to look at the differences. Right now, the best yielding CDs are in about the 2.2% range. Right in there, 2.2, 2.4.
How long? Duration?
They're all about the same because
Interesting,
the yield curve is flat.
Yeah, that's a good point.
The yield curve is flat, so they're all right about that same yield.
I thought they disproved that when they went out into space and they looked back and saw it was round. But okay, that's a whole other thing. So
No, it did. Yeah, Flat Earth Society. But the yield on the Vanguard Total Bond Market Index Fund is 2.2.
yeah, there you go.
So it's about 6-way, or I don't know, roughly half a dozen the other.
Trying to think of it from
855.
taxation standpoint, not much difference there.
935. Not much difference. 855-935-TALK, our number. We would love to help you stumble through the world of money.
Tom and Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
I love mnemonics. I love mnemonics, and we right now to remember the Vanguard Total World Stock Index.
Yeah.
It's VT Wax.
That's an easy
VT
one,
Wax.
which is where we think if you're a young person or you're helping a young person.
You're going to make bad puns now. I know you are.
No, I'm not going there. You simply put the money in
Okay.
the wax and just put the money in the
and it won't
VTWAX. I'm sorry, it's too easy. That's
Yeah.
a simple
And
one.
then-
It holds 8,000 securities. You get it at a very low cost, great diversification, terrific mutual fund.
And then I was trying to figure out a way to memorize the new Vanguard Total Bond Index ticker, the one for Admiral, and I got it.
Don't
it's
make a
V buttocks. BTUX V buttocks.
That is where you would
You
hold.
can remember that.
Yeah, that's where you'd hold the safer money, like Marty who just
You
called.
Clench that money
Let's
tightly
not
in
go
the Vanguard Total Bond. 855. I just made myself laugh. 855, because I didn't think of it till just right then. 855-935-TALK, and I probably shouldn't have thought
But
of it
that
just
fund's
then.
not going to have that much volatility, so you're not. That's a whole other thing. Okay, go ahead.
Never mind. Jeff, you're up next. Welcome to Talking Real Money.
Hi, morning.
Hey.
I've got actually afternoon.
Yes, sir.
Got a real estate question, and I'm retired, over 70. I've been in a condo for about 30 years, and it's tripled in value during that time. Situation is that we're looking at a major overhaul here that will probably cost me an assessment of $50,000 or more. And I'm wondering what my best method of handling that is. In other words,
How much equity do you have in the condo?
Probably $250,000.
That is one of the big downsides of condominiums.
You can't
is
go
those
get a
special
reverse on those,
assessments.
right? Yeah, those special. We're going
Yeah,
through the same thing with ours.
so this is your home.
Right.
You're still paying for it, right?
Yeah, believe it or not.
Yeah.
That's
I
okay.
And you don't-
refinanced to get
you
a
don't-
lower interest rate.
Well, that's good. You don't have any plans to move, and I mean, you don't need to move for any reason, right?
Well, except for that assessment that might be coming down.
Yeah. Well, the good news about assessments, and
Good news.
there is good news, is that typically they will finance
Yeah.
the assessment.
Yep. Most
And roll it into
We're
associations
talking
will.
about.
Yeah, they'll
Right.
roll it into your note. Your payment will go up. But let me just use a very straightforward analogy. If you own a single family home, as I do, I just had my own little $20,000 special assessment for my roof. A few years ago, I had a $25,000 special assessment for fixing the siding. You know, everything has maintenance. If you were in an apartment and they had to spend that $50,000, I guarantee you they're not going to eat the $50,000. They're going to raise your rent to cover that cost over time. So wherever you live, you're going to get hit with maintenance costs. And by the way, this is an aside. This is one of my beefs with condominium associations. Is they have a horrible habit of short-term thinking. They think we're not going to fund our reserves properly right now so that we can cover all these costs. We're going to let the people down the road pick this up because we're hoping we move or are dead by then. And that's short-sighted. And condo associations are guilty of that almost across the world.
Okay, but he's
around the
looking
world.
for the options to pay for it. So yes, you could just roll it into the association, right? I mean, the dues, they'll do that. Or you could, as you said, you refinanced it not long ago. You could refinance it again, take the money out and pay them.
When did you last refinance it?
Probably 3 years ago at 8.
Oh, God.
Might be worth it. Yeah, I mean, with rates now as low as they are.
Jeff, rates have really plunged. I bet you were in the 5s, maybe 6 when you refied it. Now you could be in the 3s, and that alone could make the difference between or eat up that amount that you're going to get charged, and you'll end up with the same kind of payment, same kind of term. I'd sure look into that right away. 855-935-TALK is our number. Give us a call.
Tom and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information. TalkingRealMoney.com.
Reality radio for a really great future. We're talking real money.
I've decided that Tom Cock can never appear on National Public Radio
Why is that?
because you're too excited.
Oh, okay. Well, I mean, because we're
You're
doing.
just,
I know, because
What?
we're doing the Husky pregame show. This is a big deal. I love
You
this.
were doing jumping jacks
I
in
know,
there with
'cause
the
trying to get going. It's
do
been
it
kind of slow
You got
morning.
you got and you got the tires out in the hall that you're doing a little run through the.
Wouldn't that be nice? Yeah, sure.
Yeah, you can't do that anymore.
No.
Not with your knees. Not with your knees.
Not even close.
Hello, everyone. Welcome back to the show. We call it Talking Real Money because, well, I'll let you guess why. Yeah, you're right. We talk about real money. The money matters that matter most to you. And you can call us at 855-935-TALK. It's free. And not only that, but you'll get tickets to one of our next classes. Free.
October.
Yeah, I know you want to say something, Mr.
October,
Excitable.
September 17th in Linwood, the 18th in Tacoma, or the 21st in Bellevue. There, I did it. Okay? All right. Not easy to
Sounded like
remember.
an infomercial to me.
A lot of enthusiasm.
Sounded just like an infomercial to me. 855-935-TALK's our number, and we're going to visit with Margaret next. Hi, Margaret. Welcome to Talking Real Money.
Hi. Hey, I have a question
Hiya.
for you guys about long-term care insurance.
Yes.
Okay.
So what I'm kind of considering is one of these newer programs where the premium is not a month-to-month premium, but a lump sum premium.
It's a hybrid. Yes, you give them a certain amount of money. The premiums come out of that, and then if things work out at the end, you get a bunch of that back.
That's right.
Yeah.
So my question is, how would you recommend evaluating whether that's a good idea?
Tom's going to start, and then I'm going to finish.
There really is. In other words, if you put it in the computer and you say, which one do I end up with more money with, paying a... And by the way, it's very hard today to buy the traditional long-term care policy where you do just pay month to month, and it's hard to analyze because so many of them have started out at $400 a month, and then they notify you next year it's going to be $900 a month. There were like 600 companies that were writing these policies, and today it's like 12. Because they figured out they're not making money. So it's a hard thing to analyze. It's like and Don has done this better than I have. Insurance is simply a transference of risk. You don't want the risk of having enough money to take care of yourself, or somebody else when you're unable to do it for yourself later in your years, right? And that's the trade-off. You're going to give somebody a certain amount of money to deal with that for you. That's worth something, or not.
It is. Let me just tell you, and I know this is a terrible answer, but this is the truth. And one of the things we try to do here is speak the truth. There is absolutely no way to know. You are going to be guessing. And if you guess wrong, it could be very painful. If you guess right, it could be decent. It's not going to be great because these policies have lots of exclusions and they only pay a little bit of what typical care is going to cost down the road. They have lots of caps. They are very unlikely long term to cover all the costs of an extended stint in long-term care. So it's it's like it'll help some.
And the other part is they're still relatively new. In other words, these hybrids have only been around for a few years, so we really haven't seen them go through a cycle, if you will, where they've had to pay out benefits, give people money back, all that kind of. So the jury's out on them a bit. Again, if this is something, and Don and I are great examples of this. I have a lot of life insurance because I have an 11-year-old daughter. And the idea that something would happen to me and she and her mom would not be able to take care of themselves, I don't want to be in that situation.
I have none, and I wish my wife the best of luck.
Exactly. So, well, her boyfriend's got a really fancy job. I mean, so it's nothing to worry about. But the reality is that it's personal, it's emotional, and that's a decision every person has to sort of make. Financially, I can tell you, if you took that same amount of money and you invested it properly, you'd end up with more.
Right.
That I know.
Does that help in any way, shape, manner, or form?
You don't know when the long-term care event might occur.
No.
In fact,
Or
you
how
don't
long.
even know if the long-term care event will occur.
Exactly.
Yeah.
And so that's why
right.
it is what you're doing is you are placing a bet. You and the insurance company are on opposite sides of the table with your cards. The insurance company has far more cards than you do. Although they get it wrong sometimes, like they did with the long-term care policies, but they always have the ability to raise your rate, so they keep that in reserve. So they win 99% of the
Tom and
time.
Don are talking real money.
Just about everything you need to know about money can be found at our website, TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Money matters, so you need a little help now and again to keep yourself on track, build a better future, avoid getting ripped off. It's really an important part of life. So give us a call at 855-935-8255. Here on Talking Real Money, I'm Don, that's Tom, and Lynn is up next. Hi, Lynn, welcome.
Hi there.
Hey.
I have an 18-year-old daughter who's getting ready to go to college. She has worked and built up a small amount of money in her savings account, about $7,000. And she wants to invest some of that for retirement. She's not currently working, but she will once she gets into college. So I'm wondering if we invest part of that money for her, given the recent market volatility and possibilities of recession, where you might recommend she put that money until she has a 401k and can contribute.
Lynn, we love you. Thank you for listening. But you didn't listen to the beginning of the show. All the things you mentioned there sort of in the middle about the recent market volatility. I forget the other topic.
Doesn't matter,
doesn't
because
matter.
if the market goes, you want your daughter
Down.
wants the market
Crash.
to plunge.
Yep. More shares at a lower price.
Plunge.
Anyway, but back to where did the $7,000 come from? Did she have employment this year? W-2 wages this year or not?
So she did not this
She did not.
year. So
Okay.
right, last year she did. So yeah, and I know it's once the market goes down, it'll be a great time to buy up shares. But at this position right now, where might she put
Well,
her
here's
money?
the thing. Here's the deal.
Lynn.
She should always
You're
be
killing
investing.
me, Lynn.
Here's the deal. Let's say she goes in now, and we have another 2008, but she builds a globally diversified portfolio in just stocks all over the planet, very aggressive. She goes in and it drops 50%. What impact is that going to have on her today?
Well, yeah, today it won't
None.
have any impact on her, and she definitely is investing, for the long run.
Yes. As anybody who invests in stock should be, by the way.
And she will she would have in any period in the past recovered in relatively short order, months, not years, months. If she was well diversified. We've got the numbers on well diversified portfolios. We're not talking about outliers like the NASDAQ 100 back when. We're talking about a global market.
Okay, but let's go back to her specific situation. If she'd had earned income in 2019, this would be a no-brainer. She'd go open a Roth IRA. She'd own the VT WAX, Vanguard Total World Stock Index. But
given the fact that she can't put that in an IRA, I would suggest she own the same darn thing.
Yeah, so
because
maybe
she's not going to have any tax ramifications.
Yeah, so maybe take half of it. I don't
No,
know.
all of it.
Well, but if she wants to save some for some other use.
Right. Whatever she's going to use for retirement, whatever amount she says, this is the amount I could put away and not touch for 40 years. That's the amount, or 50 years. That should go into VTWAX and just sit there, and every time she has some spare change, she should put it in the same account.
And you can do that easily by going to Vanguard.com, opening an account there for her, and away she goes. Pretty easy.
Cool. Okay.
Does that make sense? Vanguard.com,
Yeah.
VTWAX.
Perfect.
Hopefully that fund, thank you for your call. Hopefully that fund makes double digits over time. I mean, you would, looking back, it probably has because it's all in stocks. Lynn, thank you for the question. By the way, this comes up a lot, so I'm going to go ahead and do a little shameless self-promotion right here, Don.
Yeah.
Okay? Because
I don't blame you, actually.
Because this comes up a lot. We recommend a Vanguard portfolio, 2 funds right on the show to get people started.
Anybody can do it.
Anybody can do it. When we manage money for our clients, we do use a couple of Vanguard funds, but for the stock part of our portfolios, we use a fund family called Dimensional Funds, which are constructed differently than Vanguard. So when you come in the office, somebody did this week and said, well, Don and Tom told me just use Vanguard. Yes, if you're going to go do this on your own, yep.
For your first yep. 10 or 20 or 30 or $40,000, yeah.
We have found the Dimensional Funds has done better over long periods of time with stocks than Vanguard for a variety of reasons. I'm not going to get into all that right now, but that's happened. And by the way, back to just thank you, Lynn, again for your call, 855-935-TALK. The reason that this is really going to drive me nuts. I'm going to go. You're going to go crazy when I raise this. Because guess what is coming back to employer plans? 30% of employers now offer annuity solutions. 60% of sponsors are considering them for 401k. These are prevalent in, as you talk about regularly, educational programs, right? Annuities?
Yeah.
Yeah. I don't like it. I'll tell you why I don't like it, because they make it sound like...
You don't like it.
Yeah, okay, there you go.
Oh, it's a sin. It's a financial sin. These people should be flogged in the public square. Anybody from an annuity company, an insurance company, who comes to your company and tries to put your money in an annuity product in your 401k or 403b should be publicly flogged. It is a sin against humanity. It should be illegal. I despise people who sell these products because unless they're totally stupid, they know better.
And most of them end up in
variable annuity.
Well, no, not just. I'm saying most of the employer-sponsored plans are for educators, right? Generally, the healthcare industry, not people that make a lot of money.
Right. So they get the people who need the best stuff.
Bingo.
Get the worst.
Exactly.
Get the worst. Get the dregs. Can I?
Go ahead.
I was talking to a family member, and this family member was saying, well, what do I need to do to get out of these funds and get into Vanguard? I showed them how to do it. And they said, well, let's talk about my wife's 403b. And I said to the wife, what are you in your 403b? She goes, she's a school teacher. Oh, man, starts with a V. I said, not Vanguard. There's no chance of that. She goes, no.
Sounds
I said,
like
is
a
it Valak?
pickle company? Yeah. Right.
Yeah. She goes, yeah, how'd you know? I said, because I hate Valak. And you know who their parent company is? You kind of wish the government maybe hadn't bailed them out, because at least they would have gone away, and that's AIG.
Of course.
Valak salespeople hang out on hospital campuses, on school grounds. They hang out and they tell these teachers that their stupid, overpriced variable annuity products are actually good for them in a 403.
And
I'm sorry, I'm really riled.
Back to Lynn is you need some basic education about markets. You don't need to know how to trade markets. You don't need to know how to pick stocks, time markets. And by the way, when you switch your asset allocation from 60% in stocks to 40% in stocks, that is market timing. Don't try to argue with me and tell me it is market. Don't market time. You got to have a strategy. You got to know what you're doing so that you can't go see somebody who says this is the wrong time to invest because markets are at new highs. They don't know. They don't know what's coming tomorrow. So you need some basic education. That's why.
Where do you get that,
Thank you, Don. You get that at the Real Retirement Roadmap, the map that Don's got. He's holding it right there. Coming up Tuesday, the 17th in Linwood. Isn't it beautiful? The 18th in Tacoma.
I hate these big folding.
The 21st in Bellevue.
They're really big folding maps.
Go to TalkingRealMoney.com, click on events, and type in the special code MAP. come and see us at one of these classes. You will learn, take care of yourself.
Tom and Don are talking real money.
Would you like to talk to a real investment advisor for free? Set up an appointment at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Well, Tom said it, but you still need it, and that's our class. That's coming up in September, somewhere in the Puget Sound area. So go get your tickets and save half off your tickets with the promo code MAP. Just go to TalkingRealMoney.com, TalkingRealMoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.